Welcome to the final video for this Accounting 1 class. This is going to be the Chapter 10 handout answers. So hopefully you got a chance to go through this Chapter 10 handout that I posted onto your modules and you've tried to do the work. You're just here to check up on it. We're going to be talking about issuing some stock, buying and reissuing some treasury stock, and some retained earnings work on here. I left off a dividend question. Hopefully you watched the handout or the lecture video and you know how to calculate or know when to make journal entries for those. So let me share my screen here and we'll get started. And once again, I'm not going to use the journal page. I'm just going to write it straight onto my Word document here. All right, so Palin products sold 46,750. Instead of sold, you could also say issued shares of common stock to stockholders at the time of its incorporation. They received $48 per share for the stock. Okay, so the first thing I want to do is I want to take this 46,750 and multiply it by 48, and I find 2,244,000. Okay. That is going to be the cash that they received when they issued this common stock. That's the first thing we need to know. So now we have three different questions here. Assume it has a $16 par value. Assume it has a $9 stated par value. Assume the stock has no par value and no stated value. Okay, so how do we record them? What we need to remember is that the common stock account always goes in at its par value, okay, or its stated value. Okay, same thing, stated or par. If it has none, it just goes into what the cash received is. So at 16 par, our journal entry, we would receive cash 2,244,000. Common stock is going to be a credited account, and from now on, whoops. Whenever I am going to write common stock, I'm going to put C/S to stand for common stock, okay? Our common stock goes in at the 46,750 shares times 16, which comes out to 748,000. So that's what we would record as common stock. And then we have this other account, additional, that's PIC, paid in capital, additional paid in capital, CS, common stock, okay, for the remainder. If we're recording under the $9 stated rate, we still record the 2,244,000 as cash. Our common stock here would be the 46,750 times 9, which comes out to 420,750. So we would credit that, and then we'd have the same count, additional paid in capital common stock that we would have to credit for the difference here, 1,823,250. If you remember that common stock and the additional paid in capital common stock, they are linked together on the balance sheet in the paid in capital section, but this is just how we have to record it. Okay, now if it's no par, it's a simpler entry because we just take our cash here that we received and we put everything into the common stock category. Okay, and we just eliminate that additional paid in capital account. Okay, so there's how we would go through and journalize the issuance of stock. Second question here. On August 19th, we purchased 2,600 shares of our common stock for $7 per share. And then we're going to sell 400 of them for $12. And we're going to sell the remaining for $5 per share. Okay, so we're going to make an 8/19 entry. On 8/19, we bought treasury stock. Treasury stock is buying our stock in the open market. It is going to reduce our equity. So instead of making a credit entry, we need to debit our treasury stock. And since we repurchased it, we are going to do a credit to cash. Okay. So we did 2,600. We paid $7 a share for them. That comes out to 18,200. That is the amount for our first entry. On 1031, we sold 400 shares of treasury stock for $12 per share. So our cash here is going to be 400 times 12 or 4,800. Okay. Since I know we sold it for more, we're going to use the cost method. I know I can put treasury stock here, TS, as my first credit entry. Remember, it has to go out at its cost. So it's 400. Our original cost was 7. So we would remove the treasury stock at 2,800. And since it's a credit here, we have this account called additional paid in capital treasury stock, which we debit, or we can credit whenever we resell treasury stock above. We can debit it if we have it in the account when we sell it below, but it can never have a debit balance, only a credit balance. Okay. I'm gonna have to make my last entry over here. Okay, so on 12/31. Okay, I'm gonna do my calculations for it down here. At 12/31, we sold the rest of our treasury stock for $5 per share. So we had 2,200 remaining. We sold them at $5 per share. So we are going to receive $11,000 cash on this date. So our cash is going to go up $11,000. Okay. I'm going to skip 2 lines. Okay. And I'm going to credit my treasury stock. My treasury stock has to go out at its original cost. So I have 2,200 of them now times 7 is our original cost. So we need to credit our treasury stock for 15,400. Now we got to come over and make this balance. Our additional paid in capital treasury stock we can do for 2,000 because that's what we created it for right there. Okay, but it can never have that debit balance. So we have to stop right there at 2,000. And the remaining is going to lower our equity through retained earnings will be your other account here. So we need another 2,400 in order to balance that out. So now we have 15,400 on each side. Okay, so there is journal entry 1, journal entry 2, and journal entry 3. And finally, manufacturing had beginning retained earnings of 650. We paid cash dividends of 70 to preferred, 55 to common, and net income for the year was 340. What is ending retained earnings? Remember, we take our beginning retained earnings plus net income minus dividends to get our ending retained earnings. So our beginning was 650. Our income was 340. The total dividends here were 125,000. Okay, that is the 70 plus the 55, making our ending retained earnings $865,000. And that is your basic retained earnings statement without having to write out the whole statement. That's how that process is done. The only thing we did not talk about was dividends here. Remember, we have a date, the date of declaration, we debit dividends, credit dividends payable for the amount, date of record, no entry, and the date of payment, we debit that dividends payment payable and credit our cash. That is it for this semester. Thank you all for taking the time that have watched these videos. Thank you for watching them. I hope they were helpful. As I said at the end of the chapter 10 lecture video, please, if you have watched these videos, please fill out that instructor evaluation form. Let me know how they work for you, what you liked about them, what you didn't like about them, what I can do to improve. I look forward to hearing from you because it definitely does make a difference on how I present these classes in the future. Since this is accounting 1, I will hopefully see all of y'all in accounting 2 at some point in time, whether it be in the second part of the summer semester, maybe next fall, next spring. But I look forward to hopefully maybe seeing your faces and getting to know you in person. I've had a great time being your professor this semester. Enjoy the rest of your summer.